What's up, everybody, and welcome back. Today, we're going to be talking about some predictions and forecasting for 2024. Now, look, I'm going to be the first to say that the forecasting that we're going to do today is going to be a little light, and come mid to late January, we'll give you guys a full recap of the 2023 year in real estate here in the Triangle and some further predictions for 2024. But as we sit here today, one of my favorite things about forecasts that have already come out is that some of them are already wrong. So let's start with that. This forecast from Goldman Sachs that came out in November of this year, so just a month ago, where they said Goldman Sachs is predicting mortgage rates will remain above 7% in 2024. And look, we're not to 2024 yet. We got a few days left in the year, but we're sitting with mortgage rates below 7% already. And I suspect that we're going to enter the year with those same rates below 7%. So given that, they're already wrong on their forecast that they released just a month ago, right? So things change, and in today's world, things change quicker than they ever have. So what are some thoughts around mortgage rates as we enter 2024? Well, like we mentioned, they're already below 7, and I suspect that they're going to stay below that number into the first quarter. Just last week, the Fed announced that they plan on cutting rates at least 3 times. Remember, this is the same group that said they would raise rates 2 to 3 times in 2022, and then they raised them 9 times in the year. So, you know, we got to keep in mind what they say is not exactly what they do. But they said just last week they're going to cut rates 3 times in 2024. Now, how does that impact mortgage rates? Not to bore you with the details, but the 10-year Treasury is what tracks mortgage rates. And the 10-year Treasury, upon that announcement from the Fed, completely plummeted, which means mortgage rates came down as well. So if the Fed does continue to do that and the stock market responds accordingly and positively to those cuts, we suspect that mortgage rates will continue to stay where they're at. Now, look, I'm going to be the first one to tell you, and hopefully I won't be the last one to tell you, we are never going to see 2.5% mortgage rates again unless we're in a global pandemic. That was just a thing of that time. We're not going to see those again. However, going into 2024 and sustaining throughout the year, I do think we'll be in the 6.5% to 7% range for much of 2024. Personally, my opinion and my forecast is that we're not going to get much better than that in 2024. That could change as we go into 2025, but I do not think we're going to get much better than that next year. So stay tuned on that. Like we said, forecasting mortgage rates is extremely difficult. Goldman Sachs is already wrong on their forecast, and they have some of the brightest minds in the whole economic world working for them. So you would think that they would be spot on with some of these things. And this is just hard to do. All right, so the next question that we get for forecasting is inventory. So let's talk about inventory a little bit. One of the things that we get asked all the time is, where is the inventory? Are sellers going to come back, or is this mortgage rate lockdown that we've been in for so long now going to stay here? And much of that answer depends on what happens to mortgage rates. So as we've seen over the last few years, periods where mortgage rates rise and fall over time have different correlations with inventory. In periods where mortgage rates are low, that increases demand for homes and decreases the holding costs for real estate. And when holding costs are low, people hold more real estate and they sell fewer homes. And when that happens, available inventory decreases immediately. Lower rates means less inventory. For most of the last decade, mortgage rates were so low and falling that we had almost no inventory. Here in the Triangle, from the years 2021 to early 2022, our monthly supply was 0. There were times where we had about 2 weeks of supply on the market. Look, we're better today. We're at about a 1.5 month of supply. But here's my forecast and my thoughts going into 2024. I don't think we're going to get much better than that. I think we're going to stick at that 1.5 months of supply status. Maybe we'll trend downwards at some point in the spring, and then as we move through the summer and fall, it might trend back upwards a little bit. But I think on average, throughout the year, we're going to stay at that 1.5 mark. Now here, these are the 2 caveats that could change that. If mortgage rates do sink below 6.5, and say we get closer to mortgage rates below 6%, I think inventory will decrease even further. Now, that's contrary to some thoughts. Some people think that if mortgage rates decrease, people will list their homes because now they can go buy something. I personally think that many people made the real estate decision that they're going to make for the next 10 years in the years 2020 to 2022. And I just don't think we're going to see a drastic rise in inventory. However, if mortgage rates increase, I think we could see a slowdown in demand, which could potentially lead to an increase in inventory. But we have yet to see that this year. And if there was ever a year that we were going to see it, this would have been it. So I don't count on that. Again, my expectation and my forecast is that we're going to see the same status that we saw this year, that at about a 1.5 months of supply of inventory. All right, last and most importantly for everybody, this is what matters the most to most people, especially those who already own homes and those who are considering buying homes. That is, what are prices going to do? Well, we just talked about inventory. We just talked about mortgage rates, how those are correlated. But the biggest correlation here is between inventory and home prices. If inventory remains low, which we suspect it will, home prices will continue to have their subtle increases. Look, for many years here in the Triangle, we averaged about 3 to 5% increase in home prices year over year. And that was the case for years. You could basically count on it here in the Triangle. Then from 2020 to 2022, there were periods where we saw 20 to 30% increases in home prices. Again, unsustainable, and we're paying for that now. But that being said, I think we're back in a place where we're going to get back to our 3 to 5% increase year over year. You can basically count on it. And here's what we're seeing this year. This year, we're going to end the year about 3% increase in Wake County in home prices. And I think we're going to see the same thing in 2024. So while I won't say that 2024 is going to be an exact repeat of 2023, I think there will be some nuances. I don't think there's going to be many drastic changes in the marketplace here in the Triangle. There's caveats on that, right? We do have a presidential election year. We do have some geopolitical instability at the time. And so those two factors could certainly play a role into what happens into the marketplace. However, given what we know today, my expectations is that we're going to see a similar year to 2023, again, with some nuances built in. But I think much of the same holds, and with that, we continue that into 2025. Hope you enjoyed the video. We hope you enjoyed our forecast, and stay tuned as we move into 2024 and we provide you with a recap of the market in 2023 and some further data and details on the year to come in 2024. Thanks for watching. We'll talk to you soon.